Focus. Ideate. Innovate. Enable.
Hello and welcome to Digitizing India, a Cisco initiative in collaboration with CNBC TV18. Now, after a successful launch of the Digitizing India campaign in April by the Union Minister of Communications and IT, Ravi Shankar Prasad, we now flag off a 6-part series that will take a look at the impact of technology and digitization across diverse sectors. This week, we're focusing on the BFSI sector, that's banking, financial sector, and of course, insurance. We'll bring you stories of digitization from HDFC Bank to Kotak Mahindra Bank and UTI Asset Management Company.
The banking, financial services and insurance sector in India is witnessing a surge in growth. The Indian banking sector's assets are expected to rise to $28.5 trillion by FY25 from $1.8 trillion in FY14. A 2013 KPMG and CII report expects the Indian banking sector to become the 5th largest in the world by 2020 and 3rd largest by 2025. According to the Association of Mutual Funds in India, assets managed by the Indian mutual fund industry have grown from $181 billion in March 2015 to $203 billion in March 2016, representing a growth of 12%. A robust BFSI sector is the backbone of an emerging economy, and India is no exception. Large-scale adoption of technology by companies has led to efficiencies in business, from increase in revenue, enhanced customer experience and optimized costs to enterprise risk management. HDFC Bank CIO Munish Mittal has played a crucial role in this digitizing story.
From day one, when we brought, let's say, debit cards to this country, right? The debit cards did not exist. We brought the whole concept of online real-time ATM. We brought the concept of SMS banking way back in 2001, where you could pay your electricity bills on the SMS banking. So paradigm shift is the whole DNA of HDFC Bank. We are a modern bank. We were a born digital bank. We continue to embrace new technology. We continue to recognize the disruptions, at least if not ahead of the time, the moment they hit the market, and be ready fast. And the method with which we've been, like, specifically in the last few years looking at, is making all our workforce, all our employees equally digital savvy through this embedding of digital in the DNA, through this enterprise-wide evangelism. We do demonstrations of our digital offering, like we have a chiller, we have PayZapp as our wallet, we have Smart Buy, we have bill payments, we have tax payments. Last 2-3 years, our focus has been to actually introduce more speed on the product offering which we have to the customer, offer more convenience, offer immediate, further enhancing real time into immediate gratification, real time credit into the account, and creating an omni-channel experience that you go to ATM, you go to merchant, you call the call center, you come to the branch, you have the same back-end platform facilitating, for example, a application for a personal loan or an auto loan.
In today's fast-paced world where technology is constantly disrupting business processes, staying at the edge of the envelope is the new mantra for players like HDFC Bank that have not just adopted newer technologies for efficiencies, but have created new experiences for customers.
Specific disruptions which we are seeing coming is the advent of smartphone, right? The phone itself is a big disruption. Customers are embracing smartphone. That gives the power of a computer in the hand of the customer. That gives the ability to access internet on the device which is now in the hands of the customer, which was not there earlier. Now, for a bank and financial services, it is important to understand, recognize these disruptions and offer the same experience to the customer. So when it comes to commerce, for example, whether it is tax payment, bill payment, but actual shopping, so things like Smart Buy for HDFC Bank is our way of recognizing these disruptions coming and offering an experience to the customer where customer can do the shopping on the Smart Buy in HDFC Bank. Besides that, I think there are more disruptions coming. For example, Recently, a unified payment interface has been launched by National Payment Corporation. Now, that is itself is a big disruption. A customer has an ability to apply for a virtual ID with any bank and use the services of any bank irrespective of where their bank account is. So, some of these disruptions are very interesting and good opportunities for banks to look at acquisition as an opportunity.
Social, mobile, analytics, cloud and Internet of Things, SMACI as the experts call them, are fundamental tools of digitization that companies are leveraging in order to stay relevant and progressive. These are tools that offer better insights into customer behavior while being able to service their needs better, quicker and cheaper.
I think cloud is a big leveler. Some of the new players can offer solutions without having to invest the same amount of money which was originally required. We have adopted cloud technology in our data center where we can scale up quickly and we can also shrink using cloud technologies. Similarly on analytics, I think it's very important to understand what does a customer expect from the bank. Like for example, if you just used your credit card and purchased a return ticket to London on one of the travel portals, now I know that you have done that, right? So through analytics, I should be able to quickly determine that it is possible that you may need a Forex card. Through analytics, I should be able to determine that if you already have a Forex card, maybe you need a top up, maybe you need a different currency because this time you are having holiday in Switzerland, last time you had an holiday in Asia, right? So you need a different currency. So I think analytics and cloud definitely play a big role in building scale, in anticipating the customer need, in enriching the experience of the customer, and for the bank to deepen the relationship with the customer.
Clearly, service level agreements get a fillip by infusing digital solutions in the back end and customer facing innovation in the front end of services offered by BFSI players. Coupled with that is the new offering in the peer-to-peer banking that mobile is now enabling, a phenomena that is sure to enable financial inclusion.
First of all, there is a lot of regulatory activism about the way the payment landscape is changing, and soon you will see that unified payment interface is going to be coming and hitting the market. So anyone who is carrying a mobile phone would be able to send money to anyone who is carrying a mobile phone without bothering about which bank, payment wallets, credit card, debit card, bank accounts, etc. That's the first thing which is happening. The second thing which is happening is on the lending side. If you really look at the tenets of banks, they basically make money by having to make the differential about the way they borrow and the way they lend. That space by itself is going through a change because the data and algorithms are defining who you're going to lend, how much you're going to lend, and which process through which you're going to lend. So I think the core tenets of payments and lending in the banking parlance is going through a sea change. And the third and most critical one is that in this disruptive world, how do you retain a customer? How do you look at the customer and serve him better, him or her better? I think that is another very interesting facets where we are seeing the transformation coming in.
After the break, we take you inside Kotak Mahindra Bank and meet the CTO Aruna Rao to take a look at how the bank is using social media to connect with the customer and employing Cisco's collaboration platforms to make call centers more effective. Stay tuned.
Welcome back to the Digitizing India series, a Cisco initiative in collaboration with CNBC TV18. Now on this episode, we're looking at the impact of digitization on the BFSI sector. Aruna Rao, the CTO of Kotak Mahindra Bank and group companies, shares her experience in taking the operations of this leading banking and financial services group digital.
Kotak Mahindra Bank's digital journey kicked off years ago when digitization was limited to banking transactions. So customers wanting to check account balances or make payments were enabled through SMSs and net banking, something that is seen as a basic offering today. Over time, the advent of social media gave the BFSI sector an opportunity to engage with customers in an environment that offers both convenience and informality, and that gave birth to a slew of digital native products by Kotak Mahindra Bank.
We have a product called Jiffy, which allows you to open an account on Facebook using Facebook credentials, and the account comes along with some social reward points. We have hashtag banking, which enables a customer to ask for banking services over Twitter, and you could actually buy a book and make a payment for it over Twitter itself. So that was the second phase, and now we are focusing on an end-to-end digitization. From the point that the customer starts to interact with us all the way till account fulfillment, it is entirely digitized. And this becomes very much more interesting on the lending side, which requires online credit decisions. So we use analytics to determine the kind of loan that can be offered and make immediate disbursement decisions.
In a bid to stay ahead of the curve, Kotak Mahindra Bank partnered with Cisco on deploying collaboration technologies across the bank, integrated with its CRM platform. By doing that, the bank has seen productivity of call center agents increase by 50 to 60%. But while technology enhances operational efficiencies, the effect also raises customer expectations, making a novel idea seem standard over time. This evolving vicious life cycle of innovation and augmentation gives a further push to newer innovations, which again are technology driven.
As we see e-commerce becoming mainstream, we see that our customers, especially what we call Generation Y, which are the people between, say, ages of 21 and 30, are expecting the same experience when they transact with the banks as they would get on an e-commerce website. So they would expect to have a choice of digital channels, on the mobile or on the net. They would expect to transact with the banks 24/7 hours in a day. And of course, they expect to have a seamless transaction experience. So banks also have started to think or rethink their channel strategy. We now think about how we can be, as a bank, a part of the customer's journey. For example, a customer does not start off by thinking that he would like to make a payment. He would probably start off thinking, I'd like to book a flight or I'd like to book a hotel, which would then result in a payment. So on our mobile banking application, we offer the ability to book a flight or book a hotel. A customer can go in, make his choice of airline that he would like to use, pick the specific flight he wants, confirm the booking, and then the transaction would complete with a seamless payment experience. So then the payment is not the center of the transaction. It is the customer's flight booking need fulfillment that really becomes the center of focus. I think banks have to think now about customer retention, and that will become possible as we offer them constant, ongoing improvements and a good customer experience.
While competition in the BFSI space is making all players adopt newer technologies and more efficient processes, the sector is hotting up with a flurry of fintech startups, and more disruption is clearly on the anvil. Moreover, the Reserve Bank's approval to 11 entities to set up payment banks in India is sure to up the stakes for innovation both in traditional and new age banks.
Within the financial services sector, I think the major disruptions are taking place in the retail area and specifically in the payment side. Within banks, for example, we have started to see that a majority of the payments are becoming digital. In fact, 90% of the payment transactions are digital now, and they are growing at a very fast clip. About 50-60% has been the growth over the last 1 year. Also, we are seeing a large number of different kind of companies coming into this area. For example, last couple of years, we've seen the rise of the fintechs, and most of their innovation, about 20% of it, is within this payment area.
Since innovations in payments are likely to drive the economy, especially retail, futurists are already betting on new technologies that will empower seamless transactions in ways never imagined before.
You do not require a POS machine anymore, because you are, as a retailer, being one uniquely identified, and as a customer you are also uniquely identified. It doesn't matter you bank with 5 banks. with NPC as infrastructure on a unified payment, you would be identified as one single virtual ID. So if you carrying a mobile and I'm carrying a mobile with Aadhaar and eKYC and IDs-based authentication, I think the need for the account, what I need to have, and the PIN I need to know, two-factor authentication, that completely goes up because you can authenticate yourself one single click. My sense is that these innovations in the next couple of quarters will accelerate. And the denial mode for many of the banks on those areas will also come a little closer to the way the payment is coming. And the UPI full-fledged launch is going to be coming some quarters away. That is going to be an interesting cocktail about a bunch of startups which are going to be accelerating this particular thing.
On the other side of the break, we shift gears from banking to investment and see how UTI AMC, one of the leading mutual fund companies in India, is leveraging technology and what that means for you.
Welcome back to the Digitizing India series, a Cisco initiative in collaboration with CNBC TV18. We now turn the spotlight on India's leading mutual fund firm, UTI Asset Management. Managing Director Leo Puri shares his views on the impact of digital disruption on the mutual fund industry.
The biggest asset internal to a successful financial investments company is its pool of fund managers. Men and women who work relentlessly to hedge your risks and offer you the returns you expect. Can a robot take over their jobs? And what happens to your investments then? Can artificial intelligence replace the human mind to give you better returns? These are just some of the questions that leading investment advisories are grappling with when you ask them about digital disruptions.
We are seeing artificial intelligence actually now being developed, which may to some extent at least replace humans. We don't know to what extent. And I think we have to stay abreast of those trends, because were that to happen, they will not only start to outperform active fund managers, but will naturally do so at lower costs. So I think that's a very important issue. The second is in terms of convenience and access. India is going through its own revolution in terms of financial inclusion. We saw that with Jan Dhan. We are seeing that now in terms of our own experience as regards the launch of our revamped website, and of course the very exciting launch of our apps, which is UTI Buddy, both in a business to business sense where we've empowered our IFAs to be able to onboard and service customers through essentially mobile applications, but also will be doing the same directly with consumers, investors who are self-directed, who may choose to do the same in a self-directed way.
India's oldest mutual fund firm, UTI, had over 94,800 crore rupees worth of assets under management as on March 2016. With an aim to provide better services to their customers and also make their employees and business processes more efficient, UTI has undertaken a digital drive. A mobile app that is also linked to Aadhaar to operationalize KYC is just the tip of the iceberg.
The launch of a mobile application is what we are most excited about, because it not only changes the service level that we offer, but potentially offers a new business model completely. Essentially, it's a very simple mechanism by which either an advisor can enroll his client, or a self-directed client, a sophisticated client, may decide to enroll themselves directly with us. And through a highly secure application, will be able to both invest, redeem, switch and research products on the move, and do so with full knowledge and control over their portfolios. So that will also bring down the cost for us of servicing these customers, and over time allow us to take on a new class of customers, those who may have been financially excluded given the digital revolution happening in India with broadband and what we hope will be the universalization of access to the internet over the next 5 years. That could bring tens of millions of new clients into the capital markets through this proposition.
UTI MF has deployed Cisco's technologies both in the physical asset space and also on the analytical front. While communication devices and integrated video solutions help build security solutions that are relevant to the BFSI sector, the right architecture that is both flexible and adaptable is what companies need to predict business cycles like elasticity of demand. Across the board, leaders believe that data analytics will be the differentiator, and getting that right will separate the leaders from the laggards.
Data analytics will also be very critical to the way we design products, and over time to the way we actually manage money as well. It does seem a little futuristic at this point today, but I would say within 4 or 5 years, you will see a very big shift in the extent to which data is actively used as a part of active management to design investment strategies and to design products as well. So right across our business system, the ability to manage and analyze and parse data is going to be a skill that will differentiate winners from losers in our industry.
While data analytics go a long way in making customer outreach and retention both feasible and efficient, experts feel that one area where BFSI companies need to up their stakes is in data security. This is where companies like Cisco are adding value to their clients.
From the infrastructure standpoint, this is a great time for the companies to rethink about the way they write their security applications with malware in mind. And the way Cisco is doing is that whether you have protected the attack at the time it is entering the firewall, right up till the point it is infecting the particular point, at this entire life cycle, how do you really protect it at any point of time? How do you quarantine it? How do you take actions? It is a cloud-based, analytics-based security paradigm that we are trying to propagate in the industry, and I think we are really finding people to be really excited.
From social to cloud and infrastructure to analytics and data security, the BFSI sector in India is leaving no stone unturned to make their offerings robust and their customers engaged in a meaningful manner. Digitization leading to a win-win, one would hope. How are businesses across other industries using technology to disrupt conventional wisdom? Well, find out as we bring you more stories in the coming weeks. Till then, from all of us here, goodbye and many thanks for watching.
Focus. Ideate. Innovate. Enable.